how to actually choose a mortgage lender in Dallas, and really anywhere in the country for that matter. But since I'm in Dallas, we're talking Dallas. The couple things to help homeowners understand what to look for when selecting a mortgage lender in Dallas is to include a couple things like, some good questions to ask, what to look for in terms of red flags and things you should, pay attention to and how they say it. And a lot of times it's not even what they say, it's how they say it. And then, of course, the advantages of working with good folks like us here at the Mortgage Mark team. Certainly, you'll make that plug. But ultimately, we want to make sure that you're armed and dangerous so that you can find really good lender and somebody hopefully like, and trust, right? In the beginning, if you're watching this video and you don't know us, right, get to know them. Do some homework, figure out who they are, because to like and trust them, you got to know them. So first, find them. Maybe it's a referral or recommendation. Whether you find us online, look at the reviews, the Google reviews, things like that. We'll go over that here. So again, whether you're a first-time home buyer or relocation or a real estate investor or anybody just kind of looking to compare options in the Dallas area, we want to make sure that you guys understand that you get the best mortgage lender in Dallas. Have the questions to ask. Look for who somebody in Dallas can actually give you some tips on what to do. Banker versus broker, how to compare the lenders, all that stuff. So let's hop into it. So how to choose the right mortgage lender in Dallas, right, comes down to just a few things. It's get the tips and look out for or get tips on how to look for red flags and then the questions to ask, right? So first of all, why choosing the right lender really matters, because I'm telling you right now, people think, oh, I got to get the lowest rate. I got to save, this $50, $100, or I got to get 0.1 better on the rate. Man, that's the wrong way to think about it. And I can assure you, I've seen and heard, again, fortunately not with us. I haven't done this for 2 decades, over 2 decades, not with us. But the reality, it's more than just a rate. It's, this is a massive purchase. It's probably the biggest one that most people will ever make. And, in a market like Dallas, it's very dynamic, very fast moving, where some neighborhoods can be like, even in the worst of markets, can be like, hey, there's fixed offers. It's crazy. The lender's speed, their reputation, the communication can help make or break the deal. We've absolutely had people on the other side, the listing agents will say, man, they call me, Mark, good to see your name. Hey, that's great. We worked with them a ton. They know us by reputation, right? And the fact that we communicate, we're quick with them, we give them the update. We know the local guidelines, we know the local taxes, we know the appraisers, we know the market trends, we know all that so that we can make sure that nothing is left to chance. We want to make sure that both you, the home buyer, as well as anybody selling a home, right, they need to know that choosing that right lender really does matter. So the other part too that you got to look through is just, like I kind of hinted at it earlier, is like just the vendors, right? The appraisers. Somebody here in Dallas, right? There's pockets of Dallas. There's the parts that if you're in downtown or like the uptown area or like the Park Cities area, you don't want an appraiser coming from the Fort Worth side of town. And having that local lender certainly matters. And for companies like us, again, we're here to tell you just exactly how to do it and who to use, because we've been doing this for over 20 years here. So that's the part that just says, what does it really matter which lender I choose? Absolutely, right? A bad lender can absolutely cost you the home in terms of losing the home. It could also cost you more money because, again, I've heard that Justin on our team, he says the lower rate with the wrong program absolutely can cost you more money, and he's 100% right. If yes, you can get a little lower rate and you do this, but maybe long term. And there's a lot of things like, well, how does that make sense? Another topic for another day, but just trust me, it's true. So what can you expect from a good lender, right? So this is the part where a good lender, I would ask them, how long have you been in business? What's your structure as far as a company? What's your team support look like? What can I expect? And a couple of things that you need to mention are just like, what does underwriting look like? Are they local? Are they not local? What's the normal underwriting speed? How long does it take to get that done? As far as your team, like the loan officer, right? How good is that pre-approval? Is it really reliable? How much business do they do in that market? What do their reviews say? Go to Google, go to Yelp, go to whatever. Ask for that. Look for that reputational collateral, right? That says like they are really good at this, and really just look at the communication. If they're saying things that sound a little, too high level, or they're not answering the question, or they sound a little slick, there's probably a reason for that. They should be able to answer confidently and quickly and get you the good answers right away. And if they're not being quick when they're trying to earn your business, why would they be quick when they have your business? I think that's really important. So a couple key questions to ask any mortgage lender, right, is what's your current, like I talked about, the current turnaround times. How long will it take? What's it like to work with you? What milestones do you update me? What milestones do you update my realtor? What loan programs do you offer? Right? Which one's best for me? And that's kind of the second piece. Like right now, we're talking about like pick the lender, but at least figure out what they have and what they like and what they recommend and why. What are your lender fees? Right? And that's called origination. I'm using air quotes here. Origination charges. Um, most of them are flat. Some banks might say, "Oh, we always charge this no matter what." But just ask them the fees so you know and understand that in a normal competitive market, the fees between lenders should be $200 plus or minus. You shouldn't see some wild swing on lenders that are charging way too much or way too little. And if it's one that seems they're charging way too little, if they're blowing everybody out of the water, that makes me really, really nervous. I would not recommend that. You're like, oh, it's the lowest, and they're crushing everybody. Man, again, it's just this, it's a commodity as much as I hate to say it. So if you found some magic money source that somebody's just giving it away, good for them. But the reality is, I just wouldn't chance it on that. So then it goes to what else can you do, right? Like what do you look for as far as finding the good banker versus broker? People like us, we are bankers, mortgage bankers. We have the ability to broker loans. So that's certainly, ideal in the sense that if for some reason somebody does have something that's outside the box, we can absolutely go out that direction and find them something. But again, it's not about who gives me that lowest rate. Yes, we need to be competitive. Absolutely. And I think most lenders are. There's some, I won't name names, but they are known for charging way too much money in fees, hiding it. And I'm telling you, it's a really big company you'd recognize. And I don't understand how they get away with it. But make sure you understand your estimate, right? It's a loan estimate. Make sure you understand that. If you don't, reach out to us. We'll help review anything you've gotten from somebody else. In the old school, it used to be called a good faith estimate. Today, it's called a loan estimate. That's an LE, right? They might give you a rate quote comparison where it's just something generic. You can't trust them until you're ready to lock and they have your information. If they call over the phone and say, "Hey, what's your rate?" and here's the cost, just know that's flimsy. It's not a real effort on their part until they know your pulled credit and have your docs and know what program you're doing. Man, again, it's hard to trust those quotes, right? Because the discount points could later show up. There's not a lot of transparency that goes on with that. So, now let's kind of talk about how to compare lenders in the apples to apples, right? How to compare lenders apple to apples, where it's like, hey, I got this guy I really like and this gal I really like. Which one should I go with, right? So we got to know, like, and trust them. And now we know these two people. We like these two people. We trust them. Now what? Do I just compare like the APR? Like, look at that and say, oh, this one's better? APR, again, it's not. I understand the point of APR. It's a good, just, hey, let's look at it. But the reality is, I've been in a lot of companies over the years, and it's interesting how some companies can consider something an APR fee. For the most part, they're standardized. But the reality is, it's not just about interest rate, not just about APRs, not just about closing costs. Those are all certainly important. But really and truly, when you figure out the big like numbers, how to compare apples to apples, it does come down to rate, comes down to points, whether it's discount point, origination points, and also those lender fees, right? So that those parts, everything else, if it's not the lender fee, man, it's going to be the same no matter what, because again, the contract will dictate the title company. So the lender has to use the same title company, depending on what the contract says. Third party fees for the taxer and all those other things, appraisals, they're going to be within tens of dollars no matter which lender you pick. So again, just compare the lender fees alone. And then the third part would be like any credits. You do not look at like escrows, because again, the taxes for the house are the taxes. Like, I don't pick it as a lender. You don't pick it as a buyer. Taxes are the taxes. So the escrows, the insurance, you pick it. No matter what lender you're using, you're going to use whatever insurance you want. So really, it comes down to what's the rate, what are the lender fees, right? And then lastly, the points, discounts, lender credits, whatever it is, that piece in there that can change based on the rate you choose or the program you choose. That's the part. And that's why you got to ask for that loan estimate, the LE. That will look the same from every single lender. Our LE looks the exact same. That's a standardized form that all lenders will show you. Now, we included, most lenders have some type of worksheet they can give you up front because it's really quick and easy. But the reality is those LEs are where you can truly figure that out, and it prevents people from showing this really low rate. That doesn't matter if they end up having they bury these fees somewhere else and call them something different. That's where that LE should be able to say, here's exactly what I'm getting and not getting. And again, just remember the lowest rate, if they can't close your loan, doesn't matter. Or if it's here today, and then, magically when you commit to them, all of a sudden, things change and suddenly there's a lot more fees on there. That's just tough. So get those LEs, those loan estimates. You can put them side by side. It helps figure that out. I wouldn't worry too much about the details as far as like, oh, do I have to have the lowest? Again, pick somebody you know, like, and trust, and feel really good that you're getting a great and very competitive deal and that they're going to close on time, because you can absolutely lose the house if you don't pick that right lender. So that, a couple frequently asked questions. I mentioned it earlier, the APR. APR, so think of it, your interest rates, which actually matters. Your interest rates, which you pay interest on, right? That's how much the house is going to, the interest will cost you for borrowing that money. The APR says, hey, there's other closing costs, right? So at closing, if there are closing costs, which there are on most loans, figure that into a 1-year yield. Like, figure whatever formula to do to figure out this is how much this is going to yield the lender in that first year, because it's just paid one time. That plus your interest rate is how they come up with the APR. So if nobody had any fees, there's zero fees, your APR and your interest rate would be the exact same. If somebody has, certain number of fees and whatever it is, this many dollars, and they convert it to an interest rate, that's what the APR is. I would not focus on APR. I'd focus on what we talked about earlier, the real numbers, the interest rate, and then the lender fees. Those will help you to tell if what you're looking for. So how can you tell if a lender's quote is real? Really tough as a layman. I can tell, having done this for such a long time, that you look at it and just the detail. Are they, what's their attention to detail? Are all the correct fees on there? Are they in the right ranges for what you see? Are they getting real aggressive on showing you really low numbers that they can't control? And I'm using air quotes. I can't control it, but I certainly know what's normal. So if they go in there and throw really low numbers in, especially on like the prepaids, the insurance and the taxes, that's how a lot of folks can get in there and get sneaky. And then what should be in your loan estimate should be everything. Should be your interest rate, your payment, should be the taxes, the insurance, the cost, any credits, all that should be in there. So again, in my opinion, don't focus on the APR. Look at the whole thing, right? Is it the right loan? Is it the right program? Are they going to close on time? Are they going to lock your rate? Because that loan estimate will say, is it locked or not locked? And it's not locked, guys. Again, it's not, it doesn't mean a whole lot until it's actually locked. Once it's locked, then they're locked in. That's what they'll give you. But until then, things can change. So you do have to do the fee comparison. As I mentioned, the escrows can make it a little wonky. And so now the real question, right? Why work with Mortgage Mark here in Dallas, right? The Mortgage Mark team, as I mentioned, I've been doing this for over 20 years. Our team, a couple of us have been with me since almost the beginning, which is crazy. But we are local, right? We're super great at communication. The agents, we got a great reputation around town. I'm not just saying that, we actually do. Our appraisers, we've been working with for many, many years, right? You got decades of experience. Like some of our folks have been with me for, literally almost since the beginning. So we're coming up on 2 decades together of working for the core team that we have. Our rates super competitive. Sometimes we're the lowest. It's not meant to be that way. We're not always trying to be. It's just we're trying to give competitive rates. We're not trying to give you any hard sales pitch or anything like that, but we're going to give you total transparency. Make sure you got the right loan for you, for your actual needs, and make sure you understand why, like what programs are out there, and go through that consultative approach just to make sure you're good. So if you do, find us online, right? You're like, well, hey, you're a local lender, but why should I work local versus online? Well, if you're here in Dallas, again, the reasons as I mentioned, just having that local knowledge of what we do just makes things just that much easier and adds that much more certainty to what you're doing for both the sellers and for you as the buyer. And what makes us different is, again, we've been doing this for a long time. We're process oriented and we're really freaking good. And so if you want to work with a real estate agent in Dallas, hopefully they know us. If they don't, it's okay. There's thousands of them, so we're not going to say we know all of them, but I think that helps, right? We're going to give you some home buyer education. We're going to do a loan consultation. Make sure you understand all the things you need to know for buying a home in not just Dallas, but Texas, and all the mortgage rules that go with it, depending on the type of loan you're doing. And just really make sure you know exactly what you're doing, because it is so important for you to make sure that you are picking the right lender. And I do want to make sure how to actually choose a mortgage lender in Dallas and do it the right way. So if you have questions or want to talk more, feel free to reach out to us. Mortgagemark.com is always a great way to connect with us. And remember, as always, when you think mortgage, think Mark.